and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. I want to say thank you for everybody who joined. If this is your first time event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk and not suitable for everyone. If this is your first time you see the disclosures, I encourage you to visit optionscreen.com to understand the risk associated with trading stock or options. I'm not a financial advisor, not registered with FINRA, nor a CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we start, let's talk about current market conditions. We have unemployment data came in better than expected, revised down from 4.6 to 4.5 November data, 4.5 for December data, or 4.4. But so far, employment reaction is interest rates are now down. It's a volatile session, right? It's been fluctuating in the live trading room. I said we're pushing 420. Trying to break through this resistance, but people are trying to digest the interest rate decision and then look forward, right? We have a decision from, we were talking about this in the live training room, right? So unemployment data, it fell to 4.4. Okay, so November, okay, so just stand corrected. So December data came into lower than expected, 4.4, and that's what Fed committee projected for the rest of the year, somewhere in that 4.4, 4.6 range. And November was revised down from 4.6 to 4.5, better than expected, right? So positive sign of labor market resilience, suggesting fewer people are out of work and potentially supporting consumer spending, right? So you see small caps leading the market, very sensitive to interest rates and how economy is doing. And then, but payroll growth disappointed, right? Only 50,000 jobs, below forecasted 70,000, making it the weakest annual job growth since the pandemic. This indicates businesses are hiring cautiously, possibly due to uncertainties like upcoming tariffs, AI-driven automation, and broader economic headwinds. The report reflects a no hire, no fire economy. Layoffs remain low, but new jobs creation is stalling. Agreed with everything it says, pretty accurate. And then reduced odds of federal rate cuts. A lot of people are projecting that we're going to have a bullish year, right? Strong 2026. But the assumption is that interest rates will go lower beyond what the market expects of just 2 rate cuts, with the idea that once the new committee chair, Fed chair, is appointed in May, he's going to be more dovish and cut rates more aggressively, right? So based on the information, if that assumption is being correct, market will rally, or if it's proven to be wrong, then the market will sell off. Rising yields rised, now they're down. And then I think everybody is waiting for this U.S. court ruling on President Trump. Probably will happen after the close, I guess, or unless it's already happened. I kind of haven't watched the news, but that is something that I would pay attention today. Ongoing concern about tariffs, slowing growth overall, recent data showing higher unemployment, weaker hiring time, okay, and then higher valuations. Sector rotation, we see rotation, QQQ is underperforming, small caps rally, overall the jobs data is Goldilocks, enough to avoid recession fears, but not strong enough to fuel big rally. So I agree with the model. You can see it with this commentary. If you look at the QQQ, it's actually now trying to break out, right? QQQ is trying to break out of this wedge, right? We have a symmetrical wedge, right? Triangle, however you want to call this. But the idea is that we're attempting to break. I would say we need to above 630. We kind of, been stuck in this range for a long time. And these are your Teslas of the world, Apples of the world, Amazon. Without trillion-dollar companies, there's only so far can market go, right? So we need, participation from stocks like Amazon. Amazon was a signal today. I mean, it looks better, right? Amazon looks better. This was a signal from today, right? You can find that signal, all of our signals under active trader, right? If you look at the active trader, Every day we publish signals. You can trade stocks or options using these signals. So today we have Amazon, Caterpillar, and TJX, right? All have a strong performance, right? Consumer discretionary, retail stocks, industrials, and consumer discretionary / AI stock. So strong move to the upside. QQQ grinding higher. Semiconductors. So semiconductors are leading the market, right? And transportation is leading the market. Your LUV was another signal today, right? So airlines have a strong performance. LUV up 3%, and this is another signal that the model generated. I think it was on Yellow Tunnel, but anyway, but it's another signal that was generated for today, right? So airlines moving higher, semiconductors moving higher. So this is all positive. And then small caps are also grinding higher. So the next thing is, well, we still have to decide to think about government shutdown, but the odds of government shutdown are now very low. I think they're coming to an agreement of the extension of the Obamacare, and we'll see what the final news for the Trump, right? For the for the, I'm losing my train of thought. For the court decision, right? So for the Supreme Court decision, right? And then we have earnings season starting next week, right? So earnings season. But going into that, looks like, at least for now, QQQ is trying. I mean, I would say it needs to get above 630. Once it gets above 630, I think that would be a green light, and that means SPX is probably going to get above 67,000, right? We need SPX above. So if SPX can get above 7,000, and QQQ can break out of that wedge, and probably next week, I assume today we're not going to have a strong rally. We'll see, I guess. But then that would be a bullish signal. Bitcoin continues to underperform. That has been a good proxy for risk taking, but just not going anywhere. I would be a seller into rallies in Bitcoin, because the long-term trends are definitely broken, and for the past year it's not going anywhere. So we need some kind of a positive catalyst for multiple weeks, maybe even months, to confirm the uptrend. But other than that, let's see what else is interesting. And that's about it. So in terms of, and I usually like to do these exercises where we project, right? The most important is to determine position size, right? And risk management, right? When you're trading, you have to set expectation goals, reasonable goals, right? Let's say you want to outperform S&P, right? S&P projected to be up 10 to 15% this year. You want to make 15 to 30%. Okay, so then divided by how many weeks there are, 52 weeks, and then that's your weekly goal. So you divide it by 12 months, that would be your goal, somewhere between 1 and 3% a month, right? Depending on trading. Obviously, if you want 100% return a year, that's very hard. Most people cannot achieve that. So that would be very difficult to do this consistently, right? And then you have to take risk, right? You have to trade something that's very volatile, whether it's a Bitcoin that hasn't really worked, maybe currencies, right? Maybe I don't know. I mean, all of the high beta stocks are now on pause, so it's going to be hard to find. I mean, you can trade meme stocks, you can trade penny stocks, but this is, betting markets are growing exponentially, right? You can bet on United States seizing Greenland, right? So that would be that type of kind of betting market if you want to make these large returns. But if you want a consistent income kind of in more controlled environment where a little bit easier to predict, then you would trade equity or options and equities. So in terms of SPX, You can see position is at 7,000, right? Let's look at February. Let's look at February and March. So first, let's look at this. Let's look at the stock forecast toolbox, right? Our main model. So stock forecast toolbox for the 10 days, for the 6 months. Let's look for 6 months. It basically predicts that we're not going to break. Sorry, is it 10 day? Yeah, let's do it again. So 6 months prediction. So it's, January, February, February, March, it doesn't see a decisive breakout above 7,000, right? And on the downside, it sees 670, right? So that's what our model predicts based on neural networks, AI, patterns recognitions, waves. This is what the model sees. If you look at the demand and supply for futures data, for options data and futures data for February and March expiration, it shows one standard deviation. We actually can break 7,000, right? So we could end up at 7,200 or above, right? As earnings season unfolds, and is going, employment data is going in the right direction, right? At least it's stable, right? Inflation data is going in the right direction. It's stable. We're conquering the world. Venezuela getting a lot of oil. Oil prices are going down. Assuming that it doesn't spark any tension, with China or Russia, you could continue to grind higher, right? So scenario number one, we move beyond one standard deviation, right? We eventually break 7,000 and continue going higher. Scenario number two, we kind of, what our model says, maybe a marginal break to 7,100, but we're still staying in this range, right? Between 6,700, right? 50-day moving average, a little bit below, maybe reaching October, November lows. So scenario number two, kind of one standard deviation to the upside, one standard deviation to the downside. If you go back to your statistics class back in high school or college, this is a 1 sigma move, right? 1 sigma move. And then 2 sigma move would be to the right or to the left, right? Scenario number three. Maybe China, takes over Taiwan, right? Maybe, Russia has, bombs Poland, right? Today they're getting close with ballistic bombs. So you have rise in geopolitical tensions, right? Or unemployment all of a sudden jumps, right? Even though right now data doesn't support that. Then you have scenario number three. So how many of you say scenario number one? Up and away. Earnings season is strong. We're going to grow double digits. AI is here and increases efficiencies. There won't be any wars or escalations. So scenario number one. How many of you say scenario number two? We're still trading range bound. Still range bound. And how many say scenario number three? BJ, Chris, Javier, Tim, Bob, Fred, what do you guys think? Anyone? All right, scenario number two. All right, I agree with BJ. Scenario number two. I don't think we're going to have a strong rally, right? From here, not sure. I think we're going to be range bound, right? I think we are going to be range bound, even though I kind of agree with the model. Something has to happen. It could be a strong earnings, stronger than expected. I would not be surprised on one. I would not be surprised. I would be surprised in three. Like, I don't think this is my core scenario, right? I think this is a worst case scenario, which is not a core scenario. But here, I could find arguments for both cases, right? For now, I don't have to guess. If I see a breakout above 7,000 for a couple of days, then I think we could, it could just continue going higher, 7,200, 7,300. But first thing first, I would concentrate on 7,000. As long as we do not break 7,000, then it's range bound. We break above 7,000 for a couple of days, okay, I would add on risk, right? I would add on risk if we break above 7,000. Any questions? This is important exercise. Why is this important exercise? Because if I'm bullish and I think scenario 1, right, what is my stop losses, right? Well, it's probably somewhere around 6,700 or at least, November, December lows, right? November, October lows, right? If you're thinking about months, this would be, if we break below that level, then I would say the bull market, not the bull market, but at least the uptrend is on pause, right? Model C doesn't see a lot of momentum below 6,700, 6,800, right? That's your first level support. So you need to determine where's the stop loss, right? If you can say 6,700 based on stock forecast toolbox. You can say 6,550 based on traditional technical analysis. But you have to have that reference point to determine position size, because position size determines your portfolio drawdown, and it helps you achieve your goals, right? If you're day trader and you're looking for 1% return a day, right? Well, okay, then you need to have same analysis for every day. If you're not a day trader, you don't do this full time, you're not a day trader, you're kind of looking for supplemental income, okay, then you take a little bit longer term view. It could be 6,800, could be 6,700, could be 6,550. All legitimate, target levels that someone should probably be concerned about. Any questions? All right. How do we help on Tradespoon? So I already covered some of the tools. Stock forecast toolbox. Great model. You can type in any, today Amazon was a signal. Okay, you can type in Amazon. Basically, it shows you, okay, Amazon is turning bullish. Model, bullish uptrend. Long term, it's kind of still underperforming, right? 6 months is neutral. So you can say, okay, it looks like short-term momentum is there. Long term, it's not bearish. Okay, I'm gonna get into Amazon. You can type in NVIDIA. You can type any ETF and stocks. You can look at the company screener, right? Every month, every day, every month. I mean, on the first of every month, it looks at these long-term trends. So you can see semiconductors is a very strong sector. Some of the internet are very strong sector. Metals and miners is a very strong sector, right? So you can see, okay, here's the long-term trends. These are the stocks. From here, so stock signals, you would be active trader, right? So active trader is the signals every day, right? These are long-term trends. It's not a signal, just says which stocks are in long trend. If you want to decide, okay, I'm going to invest in aerospace and defense, right? You can type in your symbols here. Like today, I'm watching Amazon, Caterpillar, LUV, Micron, PSX, and TJX, right? These are all the signals that the model produced. But if you want to see signals for today, it's active trader, so Amazon, Caterpillar, and TJX. And these signals produced every day. And then weekly trader and monthly trader produced every Sunday, right? You can see every week there's a signal. So this is, if you don't do day trading, you kind of hold in position for a couple of weeks, right? 1 week, 2 weeks, then weekly trader. This week was Caterpillar, RTX, and AMAT, right? These are the signals for this week. And then you can go to monthly trader where, holding position even longer, and you can see, PCAR, Schwab, and Schlumberger, right? These are the signals for this week. So these are the stock signals. Again, you can also trade as option signals, right? You don't have to, for today, if you want to trade options, you want to do leverage, then same signal, right? And using the same target gain, using the same stop losses and target gain based on underlying stock. But here you have leverage, right? So you can buy 235 call for $3.10 or $11.30, right? Pretty wide range that the model predicting. that Amazon can be trading, and but target gain is still 1% of underlying stock, so $2.35. This is how we define this, and stop loss same way, right? So it's using kind of 1% fluctuation in underlying stock as your target gain stop levels. But again, you can adjust for beta, right? Caterpillar doesn't move as much. Amazon, TJX doesn't move as much as Caterpillar. So, based on your technical analysis, you can decide different targets. But in general, it's 1% for active trader, 2.5% for weekly trader, and then if you hold it for monthly positions, 5%. Suggested levels. I would use, kind of use this analysis of SPX. Right? You can say, 68.50. This is the gamma Philip point, right? 6,900. So you can say as long as we are above 6,900, if you're a day trader, I'm a buyer, right? That could be your stop level, right? Or if you're holding for, then you can use our analysis. Stock forecast toolbox basically says for the next 10 days. For the next 10 days, doesn't see, okay, that's Amazon. Let's look at spiders. Doesn't see momentum below 680, right? Okay, fine. So then you can say, okay, for the next 10 days, my stop loss is 680. That's that 6,800, 6,900 is the put wall, right? So that would be my proposal. So that's active trader, weekly trader, monthly trader. Any other questions? If you're a lead subscriber, come here again, welcome. You can see all of my positions in the trader log. You can enter SMS phone number or your Discord into get SMS message every time I trade. And then we do have morning bell, closing bell, and recordings, right, of all the events. I encourage you to watch the recordings. We have Keith and I kind of doing live trading room every day. I encourage you to participate. This is how you can learn. If you can't participate, please watch the recording because I answer all of the questions. Why I get into the trade, how much do I close? A lot of people ask questions that are answered in these live trading room. Usually when you ask questions, I just say, well, watch the morning bell. I explain why I bought Amazon today, right? So because people will say, well, what's this? When are you planning to get out of Amazon? What should be the stop loss? All of these questions on daily basis between Keith and I, we answer, right? Or, why did you get into QQQ, right? So all of that gets explained, and I encourage you to review that. What else? That's so that's a lead circle. I mean, a lead circle, you can see both option trades like Amazon or stock trade like Morgan Stanley and Palantir. Raytheon, regional financial single option, sometimes I trade. So you can see these trades here. If you only want option spreads, we have premium portfolio. If you only want stock, we have robo-investor portfolio. There's a lot of free content here, webinar, education. This is something you can review. I encourage you to also click on contacts and schedule consultation with Keith. He's our Chief Investment Officer. You can schedule one-on-one consultation. If you're looking for one-on-one help or one-on-one coaching, he can do that too, right? Or he can answer your questions. He's very knowledgeable. He's a great guy. So I encourage you to click on contact and schedule an appointment and get a chance to, and he'll explain more about Tradespoon, Yellow Tunnel, and all of the services provided. Homir, I mean, if you want more Yellow Tunnel, if you want to see all of the signals or more signals, you would have to join Yellow Tunnel. Yellow Tunnel is a separate company, right? I mean, I manage both. Yellow Tunnel was more of a trading psychology. A lot of signals are the same, but a lot of signals are different. So if you want to see more signals, you would have to join Yellow Tunnel, which is also fine. I mean, they're more or less the same, unless you need more signals, beyond the 3 signals, right? I would say your elite subscription covers, the content. Any other questions? All right, so schedule one-on-one consultation. We talked about active trader weekly, trader monthly, stock forecast toolbox. We do have research, right? Seasonality. January usually, could be a volatile January effect. Where January goes, the rest of the year goes. So it's important for January to break above 7,000. If January fails to break 7,000, I would be more conservative, right? I would be more conservative if we cannot break 7,000 by end of January. And then usually, April, May, you have a strong bullish pattern in the market. And then you also have probability calculator, right? You can see, just looking at the historical volatility, 680 is your support, 7,700 is your overhead resistance on spiders. You can type in any other, signals. So that would be, I would also encourage you to review some of these tools. All right, that's all I have for today. You guys are awesome. Gold, precious metal likely to do in 2020. I'm a buyer of gold and silver on pullback. I mean, obviously they're consolidating right now after kind of this vertical move to the upside with the margin requirements. But I think long term they're going higher. All right, that's all I have for today. Thank you very much, guys, and have a great day. Have a great weekend, and I'll see you soon. Thank you. I'm here. I'm glad you learned, Chris. Thank you very much, BJ. Thank you, guys, for participating. You're awesome. And have a great weekend. Take care.